Alrighty, good morning. I'm sure you've been waiting for this with bated breath. You've just been sitting on the edge of your seats, waiting, not wanting to even open Facebook for fear that you might miss this announcement and this particular video. Cash flows continued. We started it in the last class, and what we're actually going to do now is we're going to take a look at what one student astutely I like that word, astutely asked about, and that is there is two types of cash flow statements. One is called the direct method, and the other one is called, you're thinking it's going to be called the indirect method, but you're right, it is, it's the indirect method. And we're going to learn the difference between the two today, right here. This slide is going to show us, can you guess? It's the direct method. It's a very simplistic viewpoint of the direct method, which can be a lot longer and more detailed than the one you're seeing right now. But it nevertheless follows the direct method. And that is, it simply is, even though the title is called Statement of Cash Flows, it could also be called Statement of Income Cash Basis. Let me say that again. It could also be called a direct method cash flow statement, could also be called Statement of Income Cash Basis. Now, we don't call it that. We don't. So that's why I didn't write it down. I don't want to get confused. I don't want anybody walking away saying, look at this screen, it says, call this the Statement of Income Cash Basis. No. What I'm saying is that, in effect, the direct method of the Statement of Cash Flows is little or no different than what a statement of income would be on a cash basis. The statement of income in the actual financial statements, had you looked and seen that, it would be on an accrual basis. But this direct method will show you what it might have looked like if it had been presented on a cash basis. And that's because we show the income on a cash basis, and then we show all the expenses on cash basis, and then we get a net bottom line on cash basis. And truth be told, in many of the reports that you'll see that are using the direct method, it'll be in this category that will be broken out into the various component types of expenses like telephone, utilities, salaries, insurance, supplies, etc., etc. So it would detail all the components of this, all the different accounts, but on a cash basis. And that's the direct method. It's simply a very bird's eye view of what the income statement would have looked like had it been on a cash basis method of accounting, which of course we don't do. We do accrual, and that's why it's relegated here to the statement of cash flows using the direct method. Now, if you didn't guess, now you know that this is going to be the indirect method. This is what we did in class. It's what's preferred. When I say preferred, meaning more people use it this way, and I'm not sure, I don't believe, you could take a look and we could please someone do the research for some extra credit and let me know by way of email whether the AICPA or the accounting profession has a preference. In my particular experience, I see this method used more, but maybe the preference is to use it the other way, the direct method. Nevertheless, the indirect method is what we did in class, where I said we start with net income from the income statement. So this is from the income statement on an accrual basis. So it's as if to say, this statement of cash flows on an indirect way is as if to say, hey, sports fans, this is the direct method at the income statement on an accrual basis. I'm sorry, let's go back. I got carried away with the sports fans thing. I'm saying, why am I talking to sports fans? All right. It's as if the indirect method was saying, hey, look, here's what we know. We know that the income statement on an accrual basis said $35. How do you go from this to cash basis? How do you go from it? How do you reconcile it? And that's what we're going to see. Each line item is reconciling what it would be on a cash basis. what it would be on. And it's a reconciliation, so it's not telling you what the insurance expense is, but it's telling you what adjustment to make. It's telling you what adjustment to make to the insurance expense in order to get back to cash basis. It's telling you what adjustment to make to depreciation in order to get back to cash basis. So, for example, for depreciation, is depreciation cash? At this point in the course, you better say NO with big capital letters. Depreciation is not cash. It's a journal entry. And therefore, depreciation is always added back to the accrual because it's deducted from here. This $35 came about after subtracting depreciation, but that's not cash. So to get to cash, we add it back. And the rest of the detail is simply showing you, had we shown the prepaid insurance on a cash basis, what would it have done to the income statement? How would it have affected insurance expense? How would this have affected our revenue had we reported this on a cash basis? What about accounts payable? This is the other video which I show you how to determine whether these particular items are added or subtracted. So go to that video and knock your socks off. This is explaining what it looks like when you get here, and it's the fact that it's the indirect method. Indirect. And the result is that the net of all these things here, great way to show that, isn't it? The net of all these things is in this case, a plus 14. So when you add 14 to this, you wind up with $49 on a cash basis for operating activities. Remember, this is not the end of the cash flow statement, and neither is this. This is only for the operating activities, but you can see that the number is the same at the bottom line. Okay, that's the difference between income and that's the difference between income on an accrual basis versus how you reconcile it to cash basis for the statement of cash flows. In both the direct method, bing, the indirect method, bing, and that's what you need to know. All right, this is the problem that's going to be shown in your homework for the weekend. What I wanted to just explain to you is the problem gives you the statement of income for the year based on an accrual basis. And you need to go from this number on the indirect method, you need to go to this number to the cash basis income for operating activities. So this is only going to be for operating activities, not for investing and financing. But it gives you all the information you need to know for the income statement here. And here is what I said in the other video, the tools that you need, the other tools that you need in addition to the bottom line here. You need these tools, and that's the comparative balance sheet. You got 1 year and the year before, and now you can do your delta. Well, of course, cash is not part of that because that's the cash, but you'll do your delta in each of the accounts that have an effect on the income statement. And the question for you is to decide which one of these has effect on the income statement as you go along. So I'm doing all of them, but that doesn't mean they all have effect on the operating part meaning the income from a cash basis. However, to make this exercise like one with training wheels, if you learn to ride a bicycle and you use training wheels, that's what this one's going to be like, because I outlined for you the direct method, showing you what lines you need to have. So you just got to put the numbers in. And then I outlined for you the indirect method, again, only for cash from operating activities. But it's all outlined. You just got to plug the numbers in. You don't have to figure out what the line item should be, but pay attention to those so you can do one on your own without having the crutch of my laying it out for you. So these two problems, you only need to put the numbers in. Now, again, we're only doing the statement of cash flows from the standpoint of the operating activities. But you should know that there's other additional cash flows going on. It just doesn't hit the income statement. It doesn't affect the income statement. And all those other cash flows are going to get divided up on the full-blown picture of the statement of cash flow into either it's an investment, maybe the cash was used to buy an investment, maybe the cash came from selling an investment. Let me say that again. Either the cash was used buying an investment, taking cash out, or cash came to us because we sold investments. And then finally, the other category, so this is category B. This will be category A, which is what we're concentrating on. Category C is financing. So maybe we borrowed to buy a piece of equipment, so that gave us cash. Maybe we paid back the loan, and that used cash. The statement of cash flow, when you get to it in Intermediate 2, could be relatively easy if you can do this part here, because whatever you don't put in here, whatever doesn't affect operating activities, yet is used or provided cash, given you cash, will show up in only one of two other categories, either here or here. So hopefully that'll be a piece of cake when you get there. All right, so look for the homework, and there's going to be some other homework as well, I'm sure, and I'll see you later.